Okay, so I'm sorry, the sound was off on the first video. So as I said, I was just doing a video a long time. I've not done it. So usually to work on clear chart, I use the high energy candle. It's much cleaner waves than if we use the regular Japanese candle. Okay, so just to know why. So where are we now? We have this M shape here. This M shape generally opens or is the end of a move, and then we see an opposite move on the other side. It can still go lower, and that's what I will show you now. So if we use the first ABC, this one, it's the one I'm measuring here, which is this impulsive move down, and then we have the A, the B, and the C would be, in this case, the 61.8 and the 1-to-1 extension. The 61.8 is right there. And if you look well, that's exactly where we stop, and that's why I went long in this area. And the other reason is another fib I will show you just after, that was confluence here. You see how perfectly we stopped there, and at the same time it was a double bottom, more or less a little bit before the double bottom with the other bottom here in 2017. We must consider that 61.8 is existing only since we have this B here, which means the 61.8 was not existing when we posted this first low. So that's why I say market is never random. You have the 61.8 right on the previous lows here, and we come back just to touch it and bounce from it. So that's why I expect we can get a move up. There is other reason like the indicators, but I cannot show that in this video now. So we have this first thing here, which is giving us the ABC, and at the same time, it's giving us the next level we can see on the upside, the 50%, the 38, 2 to 36, and 1-to-1, which is the beginning, the zero level, sorry, which is the beginning of that ABC. Each of those levels will be reacting when we will touch them. And if we look closely on a smaller time frame, you see here, we stop the first bounce right on that 50%. That's not random, that's because it's here, okay? So that's the first thing, and you see I'm working here on a monthly chart. Now, if we take, I like a lot this move because this impulsive move down is very clean, there is no green candle in the middle, it's really impulsive move, and that's why I like that ABC a lot. The most important now is that we need to respect strongly that bottom. If we break this bottom here, the next thing will be 0.9857, 0.9780, and then 0.90 if we would go much lower. So that's the big target we have on the downside. Then we can take that A, B, C here, which is the other one I've been looking for now months or more. If you draw it, I did it already here. If you draw it A, B, C, you see we had there, and that's why I said, sorry, that's why I said we had a confluence with other fib, because that's exactly where we had the 1-to-1 extension of that ABC red. Let me take off the dark one, you see better, ABC, and you see we had the 1-to-1 extension here. But at the same time, we had this monthly dark one, which is the other ABC down. If you look both of them, they are nearly in the same area. The 1-to-72 extension of the red is around the 76.40 of the other one, and the 161.8 is a little bit above that one. So same thing, if we break, we have those levels on the downside. But that's not what I'm expecting now. So what I am expecting now would be a bounce on the upside. It's exactly what we are looking at. So if we go on a smaller time frame, and you see where we are now. So you remember this red and black fib we have there. You see this one is right on the 0840, which is the same level I have posted on the other chart. I have posted, I think, tens of times in the chat, in the not in the chat, in the Twitter feed. So that's this 0850 area, and there is a big confluence there. So that's what I think we will get in that area. From there we will bounce, pull back and bounce again, and that's what we will do in between all those support and resistances till we break the fib we have there. So it means the road will be clean till we go above 109, let's say. Okay, but inside here we will bounce and pull back and bounce, pull back and bounce, and then we will go up like this. So now, if we want to measure this move, and let's say, consider we had this impulsive move up, we can look at it better on this daily chart, so it's much cleaner. You take off the noise. So this is the impulsive move up from the bottom here, the 61.8 of the big black ABC and the 1-to-1 here, okay? We did impulsive move. We have a retracement, which is always what happens. You see waves, it's always how market is working. So impulsive retracement suggesting we have another impulsive move to come. And that's what we look for. For this, we can just put an A, B, C here. If we consider this is already the bottom, it could be not. So we will know that soon with the next move, that we will see. And to look at it, we have that ABC. I draw it again before the video, so it's faster for you. So you see we have this ABC. Let's look at it on regular candle. And what do we see here on the daily? And even if we look on the 1 hour chart, what you see here, you see what is the new, what could be the new 2360% fib. Let me put it in percentage and not in value. Okay, so what would be the 2360 fib here if and only if we keep this low is exactly where we already have been struggling when this 2360 was not existing, because this one is validated since we have this bottom. So since this candle here of yesterday, at that time it was not. So you see how market is not random at all. But that's another discussion we can have in mentoring. So if we keep this low, we will see 107.31, and we could even go through it. But that's the first area where we could find some real support of resistances. And by the way, if we look at it another way, I can just add this one here. Takes me 1 minute, 1 second. If I add the weekly and daily open, you see it's exactly where we have the weekly and the daily open. So the daily is here, but we had the daily and the monthly open here. So it's a very strong area that we need to break to see above. We remember we have at 0750 and 0775, we have some big options. So I would not be surprised at all that today we would break above those one, then pull back, and perhaps we would keep it. That's where the small inside ABC like this are very important, because if we do a move like this, okay, we bounce, we pierce it, we come back above it, and then usually what happens is we use the previous resistance of the 2360 as a support to run for the next level. And in that case, that would open the break we are waiting for, and that would open the 108.40 area, which is the 50% of that ABC up. Still, only till we keep this low here, okay? So that's what I've been looking at. I wanted to share it with you. You see how we can use the ABCs inside long-term chart like the monthly chart we have been seeing, and inside smaller time frame chart to look inside the daily moves what we have. Last but not the least, what I wanted to show you is how or why I have those targets. And this is my biggest ABC, but this one is upside. That's why I say we need to keep these lows to have this validated. And you see how it is again. A, B, C is up there. So A, sorry, B, and C is up there. So the C is either the 61.8 or the 1-to-1 extension. You see the 61.8 is at 151.67. So it's very far away. But we see that the 236 has been working a lot already. It has been doing, even if we use this bottom, which is still the one in place, this one even didn't touch it. It came a few pips away, but it didn't touch it. That's another thing that makes me think we can go up. And then the targets are very simple there. We have the first target, of course, the very first target will be retest of the 236, 121.85. The second one will be the 38.2 fib. Let me put it in percentage again. I don't like to have them like this. So it would be the 38.2% fib. Okay, so we have it here in percentage at 133.25, and then we would have the 50% fib here at 144, and then we would have it this one and so on. So that's why it's very important to have that. And if we have it, and if it's validated, to validate this one exactly like the small, very small one I just show you intraday, what we need to see here is to see a break above it. So we will do a lot of things like this. We break above, we come back to get some momentum on it, and then we run for the next level. And that would be, of course, a strong support and resistance in this area. So many will play here, but we know that it will come back. If we break, it will come back to 121.85. So that's what I wanted to share with you, to show you the things I'm looking at on the downside, to look where we have been, where we can expect a move. Why? Because we have the 61.8 here of the big black fib I just show you at the very beginning, and you see how important it is to have something to look where we can go. This is the one I say, 61.8, and then we can switch to this one. That's how things are done.